Hey everyone, Cam Roberts here, and thank you for joining us on the Wealth Livecast. And today I've got my good friend Trent Giumelli, multi-millionaire and real estate authority, joining the live stream. Hi Trent, thanks for coming on.
Hello Cam and all the beautiful people out there. Hope you're all well.
Now today, Trent, we want to talk about boom or bust. We want to talk about the Australian property market, see where it's at, and get your thoughts on if it's if it's still going to boom. If it's still going to bust, we're going to talk about some property clocks. And then we're also going to talk about some of the sophisticated strategies that people can get involved with to weather any storms that might be coming. So if you're just joining us, make sure you do watch the whole training. Don't just stick around for 3 or 4 minutes and then go. Make sure you stick around to the end, and Trent's going to unpack some of that. But first and foremost, Trent, boom or bust, where are we at with the Australian property market?
Really good question. As probably everyone knows, the market is just going berserk at the moment. It doesn't matter what you're involved in. And that for me is, I lead off one of my great quotes from Warren Buffett is be fearful when others are greedy and greedy when others are fearful. I'd hazard a guess that I think the market's going to absolutely implode at some point in time. The clocks are sort of indicating 24, 25, 26, but given everything that's going on and hyperinflation and everything that's just transacting at the minute, just something doesn't feel right. So I'm thinking it's going to be sooner at this point in time. I don't know when. I'm not going to say when, but I think it's going to happen sooner rather than later.
Yep. And what gives you that sense? Because you've been in the property game for almost, I think, 20 or 30 years now, right? So, and you've probably seen a couple of booms and a couple of busts in those time periods, right? So what gives you that sense as someone that's been in this industry for such a long time? What's some of the writing on the wall, I guess you could say, that you're seeing that could lead to it imploding?
Look, first and foremost is obviously the inventory or lack thereof and the quickness of its selling. Like, it is just unbelievable. People buying $3, $4, $5 million homes in a matter of days without actually viewing them is a real big alarm bell for us. Hyperinflation is a massive one. I just was on Facebook a few minutes before this starting, and a mate of mine put a photo up and said, fuel's at $2.08 a litre in Kincumber, where I originally, grew up on the Central Coast. It's just berserk. Everything's just too perfect, if you know what I mean. Like, it's just that perfect storm where you just innately know that something is not quite right. And it just can't continue the way it is. I've been speaking with a few quite high up lenders and of major banks and private lending and all that. They're all getting concerned, as we all are, because of the way the market is right now. And look, I know I'm a bit of the black duck with all of this, or the black sheep, whatever you want to call me. Everyone's touting that they've got the secret to the ultimate of property lasting forever and a day. It's all crap. The market cycles typically, go up for 4 years and come down pretty heavily for about 12. So, that cycle will come to fruition at some point in time. It's just now a matter of when.
Right. And you talk about property cycles, I believe there's this thing called the property clock. Can you walk us through the property clock, and, is there more than one property clock?
Yeah, there's a few. So, property is typically known, it's an 18-year cycle. Everyone goes on about property doubling in 10 years. Show me where it does that. But property typically runs on a 14 and 4 cycle. So 14 years of, okay growth, and then it just goes berserk for 4 years, and then it comes backwards. That's typically, in a nutshell, how it all works. And then you've got the different asset classes, be it residential, and you move into commercial, retail, things like that behind the scenes. So commercial typically runs about 3 years behind residential, or thereabouts. Can be 2 years, can be 5 years. And it typically runs in different cycles. So at the moment, obviously, retail you wouldn't own for quids. However, that will pick itself back up over time. It's just now a matter of when that happens. When the resi market goes down, commercial market really starts to come on, which the commercial market's ballistic as well at the minute. And then the retail market will come in and, generally last, is how I perceive it. There's multiple different property clocks out there. The one we specific follow, it has been around for a long, long period of time. And I like to put my eggs in the baskets that work.
Yeah. And so if the residential property clock market isn't aligned with the commercial property clock, so if the residential clock's not aligned with the commercial property clock, is it fair to say that if a storm is coming and the mainstream media keep talking about booms or busts or anything like that, is it fair to say that it's possible that we could have a storm in the residential market, but there could be opportunities there in the commercial market, even though we're going through a storm residentially?
Oh, absolutely. There's always opportunity somewhere. It's just a matter of deciphering, where you want to be. And that's where, people like myself and our group sort of step in and guide people around, where that's going to go. The market's going to do this over the next 2 years. You might want to think about moving into this sector. Here are the reasons why. And predominantly everyone at the minute that we come across are chasing cash flow because, they've been, New South Wales has just come out of a fairly substantial lockdown. Melbourne, you poor buggers down there, are still in lockdown. So, people are losing jobs. They're struggling to get cash in. So cash flow is the big ticket item right now. And, if you bought a house in Noosa, for instance, at the minute, you're not going to get cash flow per se because you're paying a huge amount of money to get in, and your rental yields are going to be 3%. That's not great. Whereas you get in to commercial, one of the sites we've got at the moment is being completed as we speak, and the agents are sort of dictating that we'll probably get around 10% net after all costs. So there's a big difference there between what we do and what the residential market's going to do. Just bear in mind where Noosa's a bit different to most of the rest of the country, but most of the country sort of sits at about that 4 to 4.5% net rental yield marker. That's gross, not net. So you then have to take off the costs in between that as well.
Right. And what would you say to someone that's listening to this, or maybe it's the first time they've heard you speak, and they've heard you talk about commercial property, and the mainstream media is always about they always talk about property as residential, right?
Resi, yeah.
It's hardly ever about commercial. So what would you say to someone? What would you say to someone that's watching this, either on the replay or something, and they're thinking, oh yeah, but commercial, it's more risky, than residential, and residential is where I want to park my money. What would you say to them?
Mate, I hear that all the time, and I usually say bullshit. So excuse the French for everyone out there. Commercial's not that risky. It's pretty easy. The big difference between the two is obviously on residential, you're dealing with mum and dad investors, tenants, things like that. Whereas commercial, you're dealing with business-minded people, and all your expenses are on the unit. On the tenant, versus on residential, as an owner, you're paying all those costs. They're getting the net benefit of it all. So there's this big perception, and I touched on retail just before. Yeah, retail is a bit of a problem at the moment for obvious reasons, but commercial I tend to find is a lot easier to deal with because you're dealing with that person that is business orientated, is business minded. All of it's a tax write off anyway. GST, the strata, any cost associated with it, they pay a lot of it, and then you pick up the net yield out of it. I personally haven't experienced anything, being on the market for more than 30 days, 40 days is the absolute maximum we've had stuff untenanted for, just because of the what we aim at. And I'm unpacking obviously some of our sophisticated stuff now. Is where we're focused in on delivering a product, which is that sub $500,000 marker. It's just easy to rent. It's easy to sell. It's easy to refinance. It's easy to do everything. So there's a core trick to doing it, or it sounds a bit bad, but it's just having some fundamentals in play that work really well.
Yeah, and I guess that's one of the things that you do really well with people. Like if there is a bust with property, if everything does go downhill really, really fast, and there is a big storm on its way, you've got some sophisticated strategies that you're sharing with your members that it's going to allow them to weather those storms. Is that correct?
Absolutely. And some of our Palladium members are already sharing that, where we're seeing upwards of 300+% return on the development itself. And then they're getting net cash flow yields of anywhere from 10 to 17%, just depending on the structure of a particular deal. So, those sort of returns are unheard of. Everyone's probably going, oh, that's crap, it doesn't happen. I can assure you it does, because, what I've just explained with being able to do the transaction and offload all the cost onto the tenant allows the yield to come up quite significantly. And it works really well.
Yep. Okay, so if someone's watching this, Trent, and they're thinking, this sounds good, it's perked my interest, I'm open to having a conversation about finding more about property developing and commercial property in general.
Yeah.
What's their next step? Is there some sort of training that they can go and watch, or some sort of way they could learn more before having a conversation with someone?
Absolutely. I mean, we'll put up the links very shortly, but you can jump in and register for our online training platform. Watch the videos of us going through the bits and pieces of the webinar of how it all works, how it's constructed, protection of funds, capital preservation is obviously the biggest question we get at all times. We go through in detail of that, and then if you're happy with that at the end of it and you feel like, yeah, we want to inquire more, then you just follow the steps according to that. And, one of my team will be in touch to have a chat with you one-on-one. You may even get to talk to me one-on-one if you're very lucky. I don't say that in an obnoxious way, but just with the schedule. We just work out where people can then have a chat to us one-on-one and go through what your concerns are, what your goals are, where you want to be, why, etc. And then from there, you can potentially start, getting involved straight away. It's up to the individual at the end of the day.
Okay, great. So I've just put your link there, Trent. It's called the Cash Flow class, and we've just popped it in the link. So if you're watching this video, just have a look in the comments below, whether you're watching on LinkedIn or YouTube or Facebook, whether you're watching this live stream or replay. Just click on that link and get in touch with Trent and his team. Watch the class and then take the next step and go from there.
Just remember, no question is off limits. Ask whatever your concerns are at any one time, because a lot of people get a little bit scared asking the questions. At the end of the day, you've got to ask those questions to get comfortable. Yeah,
that's really good. All right. Well, Trent, it's been another great live stream. Thank you very much for sharing your wisdom on all things wealth and property. Really appreciate it.
Absolutely. Anytime.
We look forward to doing it again next week. Cheers.
Thank you to everyone who's been watching. Talk to you all soon.
Cheers, everyone.